another big bank, Goldman Sachs, came out and they said that Bitcoin, altcoins, to become more correlated with traditional financial market variables. I think I'm feeling very loose today because I'm going to say that, well, duh, of course, this is going to happen, right? So
did we lose George?
We lost George.
Frozen? Oh,
I like his freezing face, though. Look at him. He's just quizzical.
He's
just
forever skeptical.
Forever
it
frozen.
You never know. It's like
concern.
Yeah, I did not expect you to still be here. It's Russian roulette whenever your screen freezes, though, because like, are you gonna look ugly and like weird and have like a strange face, or are you gonna be like, okay, it's not terrible?
All right, let's talk about this story. I think we've been seeing this play out certainly over the last few weeks, right? Like Bitcoin is behaving more like an asset that is correlated to other assets. And I think there had been thoughts early on in crypto's emergence that, hey, maybe this is like a non-correlated asset. Maybe it acts independent of the factors that make the market rise and fall. But I think we're seeing increasingly that it's becoming, more and more mirrored to equities, right? When the equities tanked, so too did Bitcoin. So that this is being highlighted by Goldman in this report is a bit of a, as George was saying, like a, yeah, okay, yeah, we get it. Yep, cool, Captain Obvious there. But it is interesting to see this emerge. And I think it's interesting to sort of be, I think there's more momentum around Bitcoin not being non-correlated to other stuff in the market and other stuff in the world. And this is another data point that I think supports that. But George, welcome back. You're unfrozen. And we're very curious about your opinions.
Not sure what happened there. I'm sure you guys said a lot of the same things I was going to say. But this is a classic case of the banks or a banker or an investment banker seeing, something that is empirically happening and saying, ooh, let me get in front of this super obvious thing that's going to happen so I can look smart for my clients, right? We have empirically seen, and I don't know if you guys have the graphic, but I was looking at correlations this morning. So cue the graphic. Hopefully someone can pull it up. We have seen, perfect, wonderful. Since July, we've seen S&P's correlation to Bitcoin tick up a little bit. Now I'm going to throw a lot of caveats in there. What in the world does correlation mean? So when you say correlation in the real world, correlation can mean two things to people. Correlation can mean, okay, what is correlation? I don't know what you're talking about. That means nothing to me. Or you think, oh my God, if S&P goes up 10%, so is my Bitcoin, or vice versa. In reality, that's not really what happens. You can see on this chart, 0.2 correlation means that it's from a mathematical perspective, and I say this as a math undergrad, they're not really correlated, right? They're like kind of loosely, weakly, not really at all correlated. So while people say correlation, it's kind of weak. But really the reason that a lot of people in the space have kind of said this is coming for a while is because once institutions come in, they're going to put dollars and cents to work, right? They're going to buy stocks. They're going to buy, the GameStops, or they're going to probably buy something else, maybe Lowe's stock. I don't know. But they're going to buy Bitcoin too. And then as those stocks tick down, they're going to say, oh my goodness, risky assets or things that we view as risky are going down. We need to sell all our risky stuff and become less risky. So as much as we want all of these institutions to see their money in sats or see it in GWEI or GWEI or whatever it's called in Ethereum or your favorite cryptocurrency, they're not looking at it like that, right? They still see dollars and cents, and they have quarterly meetings with their investors. They have annual meetings with their investors. So they don't want to lose their money, and they're actually not as convicted as probably everyone on this call is when it comes down to, this panel or whatever you want to call it. Dollars and cents still rule the world, and returns are measured in dollars and cents, not in sats. Anyway, I'm sure you guys said a lot of that.
I have no conviction. I have absolutely no conviction. I sold everything last week down very bad. Now, the thing that was interesting to me and this goes with all the banking reports that are out there, they always kind of take the low-hanging fruit and then run with it as a report. And it's like, okay, like we know that Bitcoin and altcoins are correlated with tech stocks. Like that has been something we've seen all of last year. And even 2020, let's go back, rewind the clock, March 2020, we saw Bitcoin drop like a rock, hit really hard down to 3K levels and then bounce back up. And what did it track all the way through 2020? Tech stocks and basically the S&P 500. It followed along with it. So it's funny how they kind of cherry pick this and say, oh, when Bitcoin went down, when tech stocks went down, and when other commodity or stocks and securities went down. It's like it also went up at the same time. And like, I guess you don't need it to prove it both ways, if one goes up and goes down, and maybe that's how you make a report in banking. But across the board, it just doesn't seem like this is necessarily something that you needed to like point out. Most people kind of know it at this point. Zach, I am interested to get your thought. Maybe you have a little more nuanced take on this. To me, it just seems like another banking report that is irrelevant.
No, I got nothing. I mean, I think it's like the institutions are here, right? The institutional Bitcoin herd, and it was going to be this great big thing. And it largely has been a great big thing, but it means that, as George was saying, this is the flip side of that coin, right? Institutional Bitcoin adoption means that Bitcoin behaves more similarly to other institutional assets. And I think this has been manifesting itself over the last year for sure. And as that handy chart that George brought out, I think some of the data supports that. But George, last thoughts.
Last thought. You can also make the numbers say what you want them to say. I actually saw Alex Thorne from Galaxy Digital throw up a 40-day correlation chart to, I think, tech stocks, and it was incredibly correlated to Bitcoin. So numbers can lie sometimes depending on how you show them. You just got to put a lot more context around them. So to the defense of Goldman, maybe they were looking at 40-day correlations, maybe not 90 like I do. So